Have you ever found yourself needing a little extra financial help to cover an unexpected expense, fund a big purchase, or consolidate some debts? It is a common situation for many of us. For Muslims, navigating these financial needs can bring a unique challenge. How to do it while staying true to Islamic principles and avoiding riba, which means interest. The good news is that Muslims can absolutely get personal financing without riba. They do this by turning to Sharia-compliant alternatives offered by Islamic financial institutions. These institutions provide financial products structured in ways that uphold Islamic economic teachings, focusing on ethical transactions and partnerships rather than conventional interest-based loans. The prohibition of riba is a fundamental aspect of Islamic finance. Riba refers to any increase or addition charged for the use of money or a commodity, which is essentially interest. Islamic teachings view money as a medium of exchange, not a commodity to be sold for profit itself. Instead, financial transactions should involve real economic activity, sharing of risk, and equitable distribution of gains and losses. This principle steers away from traditional lending models where money is simply lent and repaid with an additional interest charge. Instead, Islamic finance utilizes different contracts based on trade, leasing, or partnership, ensuring fairness and ethical conduct in all dealings. So, how does this actually work when you need personal financing? The most common Sharia-compliant solution for what might be considered a personal loan is often a Murabaha contract. In a Murabaha arrangement, if you need funds for a specific item, like a car, furniture, or even to pay for a service like education or medical treatment, the Islamic financial institution first purchases that item or service directly from a third party. Once the institution owns the item or has secured the service, it then sells it to you at a higher, predetermined price, which is paid in installments over an agreed period. This selling price includes the institution's profit margin, and it is fixed from the outset, so there are no fluctuating interest rates. Another option might be an ijara contract, which is a leasing agreement. Here, the institution leases an asset to you for a specified term and rental payments, with the option to purchase the asset at the end of the term. To access these solutions, start by identifying your specific need and researching Islamic banks or financial cooperatives in your area or online. Many conventional banks now also offer dedicated Islamic finance windows. Once you find a suitable provider, clearly communicate your financial need. They will explain the available Sharia-compliant contracts, such as Murabaha for asset purchases or Tawarruq for cash needs, which involves buying and immediately selling a commodity. You will typically need to provide documentation similar to a conventional loan application, including proof of income, identification, and details about the item or service you wish to finance. Remember, the key difference is that the institution facilitates the purchase or lease of a real asset or service for you, rather than just lending you cash at interest. One fascinating aspect is the transparency built into these contracts. For example, with Murabaha, both parties explicitly agree on the cost of the asset and the profit margin from the very beginning. This level of disclosure, often referred to as cost plus profit financing, ensures clarity and prevents hidden charges. Another insightful detail is the concept of risk sharing. Unlike conventional loans where the lender bears no risk on the underlying asset once the money is disbursed, in a Murabaha or ijara, the Islamic institution temporarily owns the asset and bears the risk until it is transferred or leased to you. This aligns with the Islamic principle that profit should be earned alongside risk. By understanding and utilizing these Sharia-compliant financing structures, Muslims can confidently meet their personal financial needs while upholding their values. It is about embracing a financial system that promotes fairness, avoids exploitation, and encourages real economic activity. This approach offers not only financial assistance but also deep peace of mind, knowing your transactions are in harmony with your faith, contributing to your ethical and financial well-being.